Okay, this is Brian Stoll for Timing Strategies, Monday, October the 15th. Real quick, I gotta go. My wife wants me for dinner and I'm late. We got the sell-off that we're looking for, but we got too much of a bounce. We've got this October 17th class reunion, October 1987 crash, Black Monday, whatever class reunion thing going on. So I anticipate the Fed and the Treasury to be very active going into that to help influence perception. But again, we were short going into today. We're looking for buying support to come in first at this 21 bar average, and then also at these support thresholds at 153 and as down as maybe 151, 151.5 on the spiders. Interesting note though that we did test this breakout level, and now if it's going to head up, now's a chance pretty much to do it. It's a do or die. We should see a little more of a sell-off hopefully to get the shorts running into the market and the longs running out. And at that point, the opportunity for them to snap it back up, whoever them they may be, or it, is there. If it stays too long below this level for the next day or two, then we're going to reassess it. But for right now, we took off half of our short position with the RIDEX fund. We still have a 30% short position on right now. We may add it, we may go back to a full short position depending on our indicators, but again, sticking to the script, we're looking somewhere around this level to be a buyer. Interesting point to get long. Now the long position will be determined at that point, and we'll post that when we do. Real quick, I want to bring out some thoughts here on what's really going on, or what I can perceive as what's really going on. Whoops, that didn't work. Sorry. CL. Okay, we're looking at the oil markets here, and this is the front month contract, $86.25. Let me tell you, when you listen to the financial flaps tell you that the weak dollar is good for our country, our economy, for all those nice multinational companies that care so much about the American family and the middle class, sorry, not. Okay, because the weak dollar, if you refer to our Dollar Dullards article on the front page, is really what's driving this. The point I want to make on this, oil at $86 a barrel, going into the Christmas season, not good, not a happy meal for most of the people that are going to be doing most of the shopping. When you think about that, also keep in mind that the Department of Energy stopped accepting payments for their royalties that are generated by the major producers like Exxon, Chevron, and so forth, and stop taking cash as a payment for the royalties that these companies owe the Department of Energy or the U.S. government, and instead opted to receive their royalties in the form of oil itself. All right? So, interesting thought on that. When a country or a government will no longer accept its own currency that it prints for payment of what previously was for royalties in the oil sector or oil department, not a good thing when they know that their own money is really not what they want, and they want you to stay in that money. Interesting point with that is the same time as you look at like the energy services. Whoops, that's a busy looking chart. Never mind. Forget all that stuff prior to that. The market being down, oil being up 3% on the crude, the XLE did not get much of a bounce, and we're looking at some very serious overhead on that market coming in right now. So if this market can break above the highs of yesterday on the XLE, certainly we want to be a buyer. Let's look at the OIH as well. Real busy chart there. Again, OIH did not get a whole lot of bump with the price of crude going up. So something's a fish here. Keep an eye on the oil, the crude, and keep an eye on the dollar. That's the most important thing, because when the oil stocks cannot really get much of a run out of a 3% move to all new all-time highs in oil, something's fishy in the market. Next quick symbol to take a look at is the GDX. That's our gold miners ETF. Again, another spike top, very much similar to this one as far as what we had on Thursday. I'm looking for eventually, probably sooner than later, a sell-off of the gold mining sector and a pullback in the price of gold. That has more than likely going to come commensurate with a up move in the dollar. We should get a bounce. Everybody's so bearish on it. I don't see how they can keep letting it go with everybody talking about it like it is. The other point about everything is that back to the Qs, technology being allegedly the canary in the coal mine as far as the business cycle. People buying technology, it's not getting the kind of buying support either. I think tech is extremely overvalued, extremely overpriced, at least in the short term. Looking for a pullback on the Qs back down to that 21 bar average right around 51, 50, maybe even 51. Back to that support level that where we had the breakout point from, somewhere as deep as possibly 50. With that in mind, the SMH, the ETF for the semi-sector, that big gap down there is really a result of Maxim Technologies, which used to be a component of that SMH ETF, being delisted. So instead of looking at the SMH, which I normally prefer to do, we're going to have to kind of use the semi-SOX index as a proxy for the short term until they get that straightened out. But back again to the main point where the market's at. Took off half the short position in the RIDEX end of day system and some of the other short negative ETFs that we use. We still have a half position on, or 30% of total account value. So we did make a profit on that. Took a while, finally. Maybe we're probably a little too early now, because if this market keeps coming back down, obviously you never have enough of your winners and so forth. But day by day we'll keep you posted, and we'll see what happens if the market gets back down into this level, if we're going to buy or if we're just going to play it for a bounce and get short again. Follow our script, look at our S&P fourth quarter analog, and that'll kind of give you an idea what we're looking for. And to everybody, good night. Thanks for your comments, questions, emails, and look forward to tomorrow.